Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.9241 mark, and here on TradingView the market is up by 1.67%. And in this video I want to give you the short-term and the long-term scenarios that I expect to play out, basing my analysis on the EBOOK structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video by giving you a brief of what has been happening here on the Polygon Matic chart. From the all-time high, we had been seeing no prices in this massive ABC corrective structure, which took us back to around the $0.32 mark. And after seeing that low, I believe it has done the minimum that we expected it to do in its ABC corrective structure. And right now we are in this EBOOK structure to the upper side, where we might see that wave 5 taking us back to an all-time high. But before we get to an all-time high, we first need to see that first wave to the upper side, and I believe that is what we have been seeing here on the Polygon Matic chart. And we have fully maximized the formation of that higher EBOOK wave count 1 to the upper side, and now my primary scenario is that we're in the formation of this higher EBOOK wave count 2 over here. And jumping to the 4-hour chart for further analysis, here on the 4-hour chart you can see I have this EBOOK wave structure in yellow, which is a fractal wave within that higher EBOOK wave count 1 to the upper side. And that is so because a higher EBOOK wave count 1 to the upper side is an impulsive wave, and we expect to see fractal waves in formation within that higher EBOOK wave count 1 to the upper side. And using the trend-based Fibonacci, connecting it from the low of the first wave down there to the high of the wave 1, then dragging the fibs to the low of the second, that is the high of that wave 3, that gives me a minimum target area to the upper side in the formation of that high EBOOK wave count 1 at the fib level 0.618, and that is at around the $1.25 mark, which is a target area that we have fully maximized because we made our high in the formation of that wave 1 at around the $1.3 mark. And right now we are in a bit of a pullback over here in the formation of this wave 2, which is a corrective wave, and because of its corrective nature we also expect to see a massive ABC corrective structure over here. And I believe we are also seeing such a structure right here, having this as the wave A, then a wave B making our peak at around the $1.17 mark. Then I'm expecting us to continue pushing even low in the formation of that wave C to fully maximize the formation of that high EBOOK wave count 2, and first giving you a target area to the low side in the formation of this wave C using the trend-based Fibonacci, connecting it from the high of that wave A to the low of the wave A, then dragging the fibs to the low of the wave B. That gives me a minimum retracement area in the formation of this wave C at the fib level 1.618, and that is at around the $0.33 mark, and that is the minimum that I will expect this wave C to the lower side to do. Once we lose the key areas of support that we have in between here, there are chances that we might get to the fib level 1.618 to fully maximize the formation of that high EBOOK wave count 2. And getting to the short-term scenarios that can play out here on the Polygon Matic chart, you can see after seeing this retracement back to the key area of support at around the $0.78 mark, we saw a bit of a bounce to the upper side, and in that movement we managed to be trading within this channel. We managed to break out of the channel to the upper side, also managed to break above the 20-day MA here on the 4-hour chart, and right now we are trading above the 20-day MA. And that gives me the first possible short-term scenario that can play out over here. There are chances that we might continue pushing higher, get to the key area of resistance at around the $0.95 mark, and at that key area of resistance we can either manage to break above that key area of resistance, even see a retest of that key area of resistance before we continue pushing a little bit higher. And in case we do not manage to break above that key area of resistance, then there are chances that we might see a rejection and come back down, lose that key area of support at around the $0.78 mark and continue pushing even lower, and that movement might fully maximize the formation of that higher EBOOK wave count 2 to the lower side. And jumping to the 1-hour chart for further analysis, here on the 1-hour chart you can see that within the formation of this massive ABC corrective structure that we have right here, in the formation of our wave C we are having a 5-wave structure in formation, where I believe we are seeing a wave 1 over here. We can have this as a massive wave 1, then this might be a retracement to the upper side in the formation of a wave 2, then a wave 3, then a wave 4, and then continue pushing even low in the formation of that wave 5. And I'm having this new EBOOK wave count after invalidating the EBOOK wave count that I had over here, having this as the wave 1. So initially I had that as the wave 1, then a wave 2, then a wave 3, then a wave 4, and then a wave 5, but this wave 4 over here retraced into the high of the wave 1, and having gotten into the invalidation point, I had to remove that Elliot wave structure on my charts and have a new Elliot wave count like the one that I'm having right now. This is the new Elliot wave count that I'm having here on the Polygon Matic chart at the moment, and we might be in the formation of this wave 2 to the upper side, and using the Fibonacci's we can get a minimum retracement area to the upper side in the formation of that wave 2 by connecting the Fibonacci's from the high of that wave 1 to the low of that first wave down there, and that gives me a minimum retracement area between the fib level 0.5 and the fib level 0.618, which perfectly lies between the $1.01 mark and the $0.96 mark, and we are yet to fully maximize that target area. And for us to fully maximize that target area, we need to break above the key area of resistance at around the $0.95 mark and continue pushing a little bit higher into this red target area that I have sketched out here using the Fibonacci's. And once we fully maximize it, then we can expect an impulsive movement to the lower side in the formation of that wave 3, then expect a wave 4 and continue pushing even lower in a wave 5 to fully maximize the formation of that higher Elliot wave count 2 to the lower side. And jumping back to the 4-hour chart to take a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 65 mark, meaning we have a bit of room for us to support any movements to the upper side before we get into the overbought region. Also taking a look at the MACD, here on the MACD we have printed a bullish cross, but at the moment we are seeing a bit of a decrease in the buying momentum, and that would result in the printing of a bearish cross. So let's be patient and see how that plays out, and I'll keep you updated.